Hello, fellow traders. 'Tis I, the Rumpled One. Monday, November the 20th, the year 2017. Horizontal lines. Let's just get right to it. Take a look at them. Okay, looking at the dashboard here, you can see those New Zealand pairs filled the gap. We looked at those yesterday, and the Euro GBP still has a gap to fill. But looking at the horizontal lines, once again, here the previous week's low. That's what the 1 means. W1's weekly. 1 is 1 bar ago. That's the TRO HL5 indicator. You can see here price crossed the line and came back across it. So if you traded that last cross, you'd be up 43 pips. And the previous week's close, if you took that cross to the upside, you'd be up 29 pips. Once again, and this would have been the this is the wick zone from last week, so it entered the zone, exited at the bottom for probably only a couple of pips, low 88. So you could have picked up what, 88, 6 pips, 5 pips if you were there to manage the trade. Saw it turning back the other way, and then it came back into that lower wick zone, weekly wick zone, and it exited. And once again, at this present time, you'd be up 31 pips. As you can see, it charts live and prices moving. So once again, a very simple horizontal line trade, and you can see it again here, here at the weekly open, which is the same as the daily today. You can see here 28 pips, and you can see all the action around the open. Now it's left. Very simple trading, nothing esoteric here. And the buy zone, you can see here we had a couple of triggers that didn't quite make it to profit, and finally we had one that did. Let's see, it's 8 o'clock my time here, so we go 7, 6, 5. This would have been the New York open, and you can see what happened. The New York session has pushed the dollar yen up. And looking at the rat zone, you can see here there's really not much separation between the zones, but it was still tradable coming to the upside. And once again, we're looking at the daily wick zones here. You can see here price escaped, came back into the zone, and once again, with the wick zones, price does not like to stay in the wick zone. And finally, just to look at some price action, I added the sweet spots gold indicator that I modified. You see here we have horizontal lines every 10 pips, and it's not hard to see that we had what looks like some ranging between the 00 and the 20. Price is just ranging back and forth. You could have used the 10 as a midpoint line and picked it off for 5 to 10 pips just on these crosses here. Or you could say, well, maybe it if this is like the upper limit and this is the lower limit, you could have traded the breakout here. Once again, simple horizontal line trades. And as you can see here, price made a lower, it made a higher low, lower high, inside bar, taking an inside bar break to the bottom, would have paid off here, high or low, taking a break here to the upside, would have paid off. Simple trading, nothing but the price action. Because price action is real simple. Either price makes a new high, breaks out of the previous candle's high and or low, or it doesn't. It reverses off of it. So in this particular case, we had an outside bar here. You can see it broke out the high side, it broke out the low side, and here we had just a straight breakout to the upside. Once again, simple, basic stuff. Squiggly lined indicators were not harmed in the making of the video. And some of you say, well, why do you keep showing the same pair over and over? Well, I do that for the simple reason to show that you don't have to jump pair to pair, but just to appease a few people, let's switch over to the euro yen and we can look. Once again, you can see here it broke out of that wick zone to the bottom. Oh, looks like there was about maybe 50-60 pips to be had. Let's see, the low was 16. So what would that be? 76 pips. Not a bad trade for horizontal line. And looking at the H1, you can see the price action there. And once again, you see here, you've got a red candle, green candle. Look at the high, a rat reversal trade, breaking out, making a new high. And there was upside. Once again here, green candle, red breaks the low to the downside. Here's the weekly open. There was pips to be taken there, pips to be taken there, and there, going the other way. Very few pips, but you can see the price action happening around the weekly open. And the buy zone once again illustrates the same concept. And the rat zone, price made a low, dipped back in to the upside, price made a high, and came out. So you can either do breakouts or reversals. Once again, the wick zone, it shows the break here, came back in, broke to the upside, broke to the downside, comes back in. So look for a wick zone trade, either short or long, but price probably will not stay in this zone. And once again, looking at the simple horizontal line trades, just trading with the H1 candle color at the horizontal line, it shows, I laugh because it's just so simple, it just shows there's money to be made just trading the horizontal line. And of course, people are going to ask about stop losses. Where do you place the stop loss? Once again, you have to look at the risk. You have to say how much you're risking, and you adjust your equation, position size, and the stop loss in pips. So the bigger the distance on the stop loss, the smaller your position size. It's just, it's a very simple equation. As you can see here, high or low, broke out of the high. Once again, a nice little price action trade. And you'd be, what, 2 pips to the good right now. So if you, I guess maybe take notes or watch the video, pick what you like. You might like just the straight horizontal line trades. Maybe 1 or 2 of them. You might like the simple price action trades. But as always, fellow traders, it's not what you trade, it's how you trade it. TheRumpledOne signing off to go drain the banks.